All right, so we've got this Yokohama Rubber 2024 integrated report, and wow, it is a thick one.
Yeah, it's pretty comprehensive.
Really is. So
Mhm.
our mission here today is to kind of boil it down to like, what are the essentials that we need to know about this company? What are they doing? Where are they going? And what's driving their value?
Yeah.
So are they going to be successful or not?
Yeah, that's a great way to frame it.
And just looking at it, it's a global company. They're doing a lot of stuff, and it looks really interesting. So I'm excited to dive in.
Me too.
Okay, so I mean tires, right? That's the first thing that probably comes to mind when we think of Yokohama Rubber.
Right, for sure.
And within tires, they're really pushing what they call AGW, which is Advan, Geolander, and winter tires.
Yeah.
And they want these like high value added tires to be like 50% of their production volume by the end of their YX 2026 plan.
Yeah, that's a really interesting strategy. They're really kind of pushing that high-end market. I think
Yeah.
they see a lot of growth potential there and higher margins, obviously.
Yeah, exactly. So what about the other half of their consumer tire production? What's the story there?
So for the, sort of the standard Yokohama brand tires, it seems like the strategy there is really focused on cost reduction and staying competitive, particularly in the face of all these manufacturers and, regions where production costs are lower. So they're really trying to kind of balance that, premium growth on the one hand and then cost efficiency on the other.
Yeah, that makes sense. Trying to kind of play both sides of the market there a little bit.
Exactly.
Now, on the commercial side, we're talking trucks and buses and things like that. They've been doing a lot of acquisitions, it looks like.
They have, yeah. They've really been expanding in that area, particularly in that off-highway tire or OHT segment. So they acquired Alliance Tire Group back in 2016, then Aichi Tire in 2017, and then just recently TWS in 2023. And that's really positioned them as the third largest player in the global OHT market, which is pretty impressive.
That is, and they're keeping all those brands separate too, right?
Yeah, that's really interesting. They're not just kind of folding everything into the Yokohama brand. They're really trying to manage those as distinct brands, each with their own kind of market appeal, but at the same time trying to find those synergies, in areas like procurement and manufacturing. So it's a delicate balance, but it seems to be working for them.
Yeah, so it's like a multi-brand strategy, almost like in the in the car industry sometimes.
Right, exactly. And I think it makes sense because, there are different customer bases, different brand loyalties within that OHT market. So they're really trying to cater to all of that.
Yeah. So what's their overall growth strategy for commercial tires?
Well, it looks like it's a combination of organic growth. So they're building new plants, for example, in Vizag, India, and Saltillo, Mexico. And then also, continued strategic M&A. So, looking for opportunities to enter new product categories or new markets. But one of the challenges they highlight is, how to effectively integrate all these new entities, while still respecting the brand identities and achieving those operational efficiencies.
Yeah, it's got to be tricky, right?
Yeah, for sure. But they're ambitious. They want to be a strong number 3 in the global OHT market.
Yeah, and they're also kind of changing their international business model a bit too, it seems like.
Yeah, they are. So traditionally, they've been very export focused, but now they're moving towards more of a global brand with local management approach. And they've already seen some success with that in Europe and India. So now they're trying to kind of roll that out to other regions as well, particularly in their passenger car radial or PCR and truck and bus radial TBR segments.
Okay, so lots going on in tires, obviously a huge part of their business.
Definitely.
Now, they also have this multiple business segment, or MB, and it looks like that's like a whole mix of things.
It is. Yeah, it's a pretty diverse portfolio. They've got things like high pressure hoses, resin hoses, couplings, conveyor belts, marine fenders, marine hoses, even aircraft components like water tanks, you name it, they've got it.
Wow, that is a mixed bag.
Yeah.
So where are they going with all that?
Yeah, well, it seems like they're trying to streamline and focus a little bit. So they're really focusing on their housing couplings business as the primary growth engine there, and then their industrial products business is kind of a stable earnings base. They've also done some restructuring. They sold off their Hamatite business and they integrated their aerospace products into that industrial products division. So yeah, really just trying to kind of sharpen their focus and concentrate on their core strengths in that segment.
Yeah, streamline and focus. That makes sense, right? And then lastly, they have this other business, which is basically their PRGR golf-related stuff.
Yeah, exactly. And they had a bit of a roller coaster ride there. They mentioned a pretty big sales surge in 2022, probably because of that, pandemic golf boom.
Everyone was out golfing. Right?
It's up, exactly. But then in 2023, sales declined. Some of that initial enthusiasm wore off and they had to adjust some distributor inventory. So now their focus is really on improving profit efficiency,
Okay.
refining their product lineup, managing inventories, better controlling costs. And for fiscal 2024, they're planning to launch their new RSX series of drivers in the Japanese market and promote their Iron series more aggressively in retail. And they also want to build that loyal PRGR customer base through these innovative products like the Red Eyes Pocket Bowl.
Okay, so lots going on in each individual segment, but what about the big picture? What are some of the overarching strategies and initiatives that kind of tie everything together for Yokohama Rubber?
Well, one of the big ones is this exploitation exploration approach. And that's really driven by their goal of achieving 1 trillion in sales revenue and becoming a truly sustainable company. And all of this is sort of formalized in their Yokohama Transformation 2026 or YX 2026 medium-term management plan. And that sets some specific targets for fiscal 2026. They're aiming for 1.15 trillion in sales revenue and 130 billion in business profit, and they have this even longer term vision for what they call hockey stick growth by fiscal 2027. So pretty ambitious.
Yeah, hockey stick growth. That's a pretty aggressive goal. What do they think is going to kind of enable them to achieve that?
So one of their big mantras is low cost, speedy development of quality products. Yeah, and they're really specific about what they mean by that. So quality products in this
Hmm.
context refers to OE tires for next gen premium vehicles. So, the tires that come standard on new cars. And they want to achieve low cost by leveraging the production model of ATG and really maximizing those economies of scale. And then on the speedy side, they're doing things like their 1 year plant challenge and really pushing AI and simulation technology in tire development. So it's really about kind of pushing the pace of innovation.
Makes sense. So trying to do things faster, cheaper, but still maintain that high quality, especially for those OE tires.
Exactly. And they're also really focused on increasing their proportion of revenue from high value added products. So things like the AGW range and larger diameter tires like 18-inch and above. And they're really trying to be very responsive to market needs in each region. So kind of a tailored approach there.
Okay, so kind of a balancing act there, right? Cost leadership in some areas, premium focus in others, and then all while trying to accelerate innovation.
Exactly.
What other kind of big strategic moves are they making?
Well, one thing that's really interesting is they've been actively reducing their cross shareholdings, which is, pretty common in Japan where companies hold shares in each other, but they've significantly decreased that since 2017. And they've also been divesting non-core assets, businesses, subsidiaries, and all of that has generated over 100 billion, which they're reinvesting in these strategic growth areas.
All right, so kind of freeing up capital to invest in the future.
Right. And then R&D is another big focus. They're investing in things like their HAI Collab, which is this AI utilization concept for designing rubber compounds. Their proprietary rubber blending and mixing technology is really a core competency for them. And they're also strategically locating their tire R&D centers in key regions, to be closer to their markets and customers. And they're really maintaining that flexible, high mix, low volume global production system, which is pretty impressive.
So adapting to kind of those local market needs,
Exactly.
sustainability, that's
Yeah.
obviously a big focus for a lot of companies these days. How are they
Yeah.
approaching that?
Yeah, it's definitely front and center for them. They're really trying to integrate sustainability management into every aspect of their business, and that includes things like contributing to a decarbonized society. So they've got their E plus marked EV compatible tires. They're adopting renewable energy sources at their plants, and they're aiming to get SBT certification, which is, that framework for setting emissions reduction targets. And then they're also really big on the circular economy, so using sustainable raw materials and promoting tire recycling. And then finally, they recognize the importance of their people. They're investing in human resource development. They've got specific targets for increasing the number of department heads with MBAs or management education, and also admin and technical staff with DX or digital transformation leadership training.
Okay, so really kind of looking at it from all angles.
Yeah, very holistic approach.
So we've talked about the segments, we've talked about the strategies. Let's get into the numbers. What are some of the key financial highlights from 2023?
Okay, so in fiscal 2023, they had total sales revenue of 985.3 billion. Tires was the biggest chunk of that, 874.9 billion, followed by multiple business at 101.9 billion and other business at 8.6 billion. And geographically, North America was their biggest market, 31% of sales, followed by Japan, 28%, Europe, 19%, Asia 14%. They've set a target for business profit of $130 billion by fiscal 2026 with a profit margin of 11%.
Ambitious.
Yeah, it is. And their profit before tax in 2023 was $105,975 million, which is a big jump from the $71,622 million in 2022. So that increase was mainly driven by higher sales volume and improved profitability across their key segments.
Yeah, so they're definitely moving in the right direction there. What is their cash flow? How's that looking?
Yeah, so their net cash provided by operating activities in 2023 was $159,741 million. That's a huge improvement from the $39,231 million in 2022, and that's largely due to the higher profit before tax and also favorable changes in working capital, so things like managing their inventories and receivables and payables better.
Okay, good to see. Now, they also have these big capital expenditures planned, right, for future growth.
Yeah, they do. So their capex in 2023 was $62.4 billion. And then for 2024 to 2026, they've got a strategic investment plan of $220 billion. And a big chunk of that, $97 billion, is going towards increasing production capacity to meet that anticipated demand, particularly in those high growth areas. And another $100 billion is earmarked for M&A, so looking for more acquisitions to kind of expand their footprint. And then on top of that, they have an additional $100 billion plan for, regular maintenance and upkeep of their existing plant and equipment.
Okay, so spending a lot to grow.
Yeah, definitely. And their R&D spend in 2023 was $18.0 billion. So, that shows their commitment to innovation.
Yeah, they're not messing around there. Now,
Right.
they also have some pretty key financial targets, right, in terms of their equity ratio and ROE.
They do. So they're aiming for an equity ratio of 50% and an ROE above 10%. And they've also got this cumulative operating cash flow target of $385 billion for the 3-year period of their YX 2026 plan. And if you kind of look at that operating cash flow target alongside their planned investments, it gives you an idea of their potential free cash flow generation. So that's the cash flow that's available after accounting for those capital expenditures.
Yeah, the money they have left over to play with, essentially, right? So they're focused on growth, they're investing heavily. But what about the shareholders? How are they planning to create value for those folks?
Well, their shareholder return policy includes a plan to pay out a total of $46.5 billion in dividends over that YX 2026 period. And they've also said they'll consider additional shareholder returns depending on, their financial performance and overall business conditions. So that could mean things like share buybacks or, further dividend increases.
Okay, so keeping their options open there.
Yeah. And they're also continuing to improve their capital efficiency. So they're going to keep liquidating those cross shareholdings, that we talked about earlier. And they've also generated over $100 billion in recent years through the sale of those non-core business assets. So they're really trying to optimize their capital allocation.
And that freed up capital is going right back into those high growth areas, right?
Exactly. So they're using those funds to invest in the OHT business to increase the proportion of those high value added products. The idea is to drive profitable growth and ultimately lead to better returns for shareholders.
Yeah, makes sense. Now, are they doing anything to kind of, communicate all of this to the investment community? Are they trying to get the word out?
Yeah, it seems like they're making a real effort there. They're trying to improve their investor relations. They're doing more IR events featuring key executives, and they've also made their IR department an independent entity to improve communication and transparency. And they even mentioned that they're a little concerned about their low PBR, despite having a TSR that's outperformed the TOPIX index.
Yeah.
So they think the market might be undervaluing their assets, and they know that ROE is a really key metric for investors, so they're actively working to improve that through all of these growth initiatives.
Okay, so they're really trying to kind of tell their story and make sure people understand the value that they're creating.
Exactly.
So big picture looking ahead, what do you think about their business outlook? What are some of the strengths that you see?
Well, they've got a lot going for them. They've got that established global presence, which has been, significantly strengthened by those acquisitions in the OHD space. They've got that deep expertise in rubber technology, which, is not going away anytime soon. And they're also making those strategic shifts towards high value added consumer tires. And they're really committed to sustainability. And they're actively working to improve capital efficiency and shareholder returns. So those are all really positive signs.
Yeah, sounds promising, but what are some of the challenges that you see?
Well, integrating all of those acquisitions, while preserving brand equity and achieving those synergies, that's not going to be easy. And they're facing tough competition from lower cost manufacturers, especially in those emerging markets, and that shift in their overseas tire business model,
Right.
moving away from that export focused approach towards that localized management. structure, that's a big undertaking. And there are always risks involved in those kind of fundamental changes. And of course, achieving those ambitious financial targets in the YX 2026 plan, that's going to require, flawless execution across all of their strategic initiatives.
Yeah, so a lot of potential pitfalls, but also a lot of opportunities.
Yeah.
So looking ahead, what would you say are the most critical areas of focus for them to really ensure long-term success? Well, first and foremost, they've got to execute on that YX 2026 plan. Hitting those targets is going to be crucial. And they need to continue that strategic M&A activity, especially in the OHT space. And they've got to successfully roll out that local for local management model globally. That's a big part of their future growth. And they're going to need to really leverage AI and digital technologies, across the board from R&D to manufacturing to customer engagement. That's where a lot of the innovation and efficiency is going to come from. And then finally, they need to be able to adapt to all of those changes in the automotive industry. All that stuff about case mobility and MAS, it's really going to shape the future of transportation. So they need to be ready for that.
Yeah, so a lot to keep an eye on for sure.
Absolutely.
Well, this has been a really fascinating deep dive into Yokohama Rubber. We've covered a lot of ground, from their different business segments to their financial performance to their strategies for creating shareholder value. Yeah, it's a really interesting company with a long history, and it seems like they're really poised for a pretty significant transformation in the coming years.
Yeah, definitely. So I'm going to leave you with this thought as we wrap up. We talked about their hockey stick growth target.
Yeah.
We talked about all those challenges and opportunities that they're facing. Everything from those acquisitions to that competition to, really needing to embrace those technological advancements and adapt their business models. So what do you think is the biggest opportunity for Yokohama Rubber, or maybe the biggest obstacle that they're going to face as they try to achieve their vision for the next 100 years?
Yeah, it's a complicated picture. There's a lot going on, and it'll be interesting to see how it all plays out.
Yeah, definitely a lot to think about.
All right, well, thanks for joining us for this deep dive.
My pleasure.